50 basis point shockwave rippling through the market. What Bitcoin traders should be watching next. Hey guys, it's Keith Allen, and well, not going to lie, I wasn't expecting 50 basis points. We got it. Yesterday I said that the fate of the market was resting in Fed Chair Powell's outlook, and he clearly delivered some news that the market seems to be responding to positively. At least that's what we're seeing now. Whether this is really heading for a legit, whether a legit breakout attempt is developing, or we have a nasty sucker punch of a fake out looming around the corner, remains to be seen. And in this Bitcoin analysis, that's exactly what we're going to focus on and try and identify the levels that can help us get some clarity on those things. Like I said at the top of this, I really was not expecting a 50 basis point cut. The market was, though. We had talked about that in yesterday's analysis and through the week, where we had seen the amount that was baked in had changed. It was, a week or so ago, even last month, it was really favorable, heavily leaning towards a 25 basis point cut. That changed heading into last weekend, where we were 50-50, and then emerged, I think, finally with about a 65% or so was baking in a 50 basis point cut just up until the moment that the cut came, the announcement came. So there's that, and the market responding well to that at the moment. Although yesterday we did actually see price dip initially. TradFi closed red, but then in the overnight hours, obviously Bitcoin has been pumping since then. The overnight hours we're projecting, a big green day for TradFi, and we're seeing that develop at the moment as well. So again, what does this all mean for the near term and the long term? So I think Powell did a good job yesterday of explaining the rationale for the 50 basis point cut, at least in a manner that didn't spook the market. And you have to wonder, though, right? Like, how much confidence do you have? And, he's never going to want to spook the market. So you have to wonder, how much confidence do you have in the info that they're sharing, especially as it relates to things like the unemployment rate, which we know they want to keep down. And maybe, the positive side of this cut is that the 50 basis point cut errs on the side of caution to be more aggressive, to ensure that they can, or at least increase the likelihood that they keep unemployment under control. We did actually have a decent reading come out today on jobless claims. That, by the way, has no, yesterday's announcement has no impact on that, right? Just as rate increases were lagging, the lagging effect of rate increases took months, years to develop. The decreases are also going to take time to work through the system. But, you could argue that at least 25 basis points was baked in for quite some time, at the very least since the August Jackson Hole meeting. And I actually heard Jay Clayton justify things and, at least put an interesting spin on things this morning watching CNBC, where he said that, maybe we should look back to Jackson Hole and consider that the actual 25 basis point cut, because the market had already baked that in. And we had shown you some metrics earlier that proved that. And so that was already baked in, and maybe yesterday's 50 basis point announcement was really just catching up to a 25 back, and all, since they didn't meet between then and now, between the Jackson Hole meeting and yesterday's meeting. So, if you calculated it that way, assuming that 25 was baking in from Jackson Hole in August, and then another 25 yesterday on the FOMC meeting, that gets you to 50. You could justify the numbers any way you want. You can always make the data, you can find the silver linings in the data any way you want to look at it. And we could we could speculate and we could debate this stuff until we're blue in the face. I'm not sure where that gets us. I think what's most important is to focus on the data that's in front of us, focus on the charts, and see what kind of determinations we should make from there. I'm guessing, and again, I say this all the time, I'm no economist. I'm guessing that, at this point, since we know that the cutting cycle has now begun, and we know that it's going to extend for at least a year, possibly even more, possibly even 2 years, then and we know that the target terminal rate at this point is 2.9%. We don't have to speculate over whether or not the Fed is going to cut. All we have to really do is look at the economic data as it comes out to determine, how things are developing from here. My assumption at this point is good news should equal good news from this point forward. We'll see how things shake out. Before we climb into the analysis, as usual, do me a favor and smash all the buttons if you like these streams. Especially make sure you hit that subscribe little bell up top and share a comment. Love the comments. Live chat, by the way, is open if you want to chime into the analysis here. Always interested in, always enjoy engaging with you guys, but always interested in hearing different perspectives and insights, and will do my best to answer any questions the best I can. With that, let's go ahead and take a look at a chart, right? And the first thing, yesterday, and I've done this quite a few times in the past few weeks, kind of identified the levels that I think we really need to be watching, and that hasn't changed. But interestingly, we do have one of those key levels actually being tested as we speak. So let's start on the that's fire charts. Let's actually start on the candle chart. But here you can see how price has moved up here over the last 24 hours or so. It really started leading up to the cut yesterday, and we've had quite a bit of movement here now, hovering under. We're actually in this level of liquidity that we've been looking at for quite a few days. As you can see, we've got this block, double stack block here to work through before 65K comes into focus, and that is a whole nother level of technical resistance. Now, to drill into that, let's look at the candle chart here, and you can see this is our daily. Actually, this is our weekly chart, and as we discussed yesterday, these are the boundaries that have really been marking the local range here. The 50-week moving average at the bottom, that's the red line, and the 21-week moving average at the top, that's the green line. And as you can see, we've just kind of come through that here this morning. And so it's not how you start, it's how you finish. So we do need to see a close up here, not just a daily close, but ultimately a weekly close above this green 21-week moving average for this to be truly favorable. A rejection obviously points towards something less favorable if you're a bull, but something quite favorable if you're a bear. Edgar says the pumplanata has started. Well, if that means pump, I guess it has. And there's no question about it. The question is this a legit breakout attempt developing, or is this a distribution rally developing? And that's what we're looking at here. So first level that we have under scrutiny is the one that's being tested right now. And that here is the 21-week moving average. Just above this here, you see the 2021 mid-cycle top. It's actually just shy of the 65K level. And this is important for a number of reasons, okay? Remember what we had back here in 2021? The mid-cycle top, which many technicians believe was the actual true top of that market, of that bull market. But we did have a major distribution event after that, another distribution rally that took us to a new all-time high before ultimately giving way to the bear market of 2022. So before we can get up, back to these all-time high levels, we've got to reclaim these levels here that we're focused on now. So sure, the 2021 top is the 21 week moving average is part of it, and really the 2021 top is a big one. But because we have so much liquidity stacked here at the 65K level, this is obviously a strong level of technical resistance. Greetings, Mike Robb. Nice to have you with us again. Appreciate the support. So I want to see obviously a close above this 21 week moving average, but I also want to see eventually, whether it happens today or it happens by the end of the week, a close above this 2021 mid-cycle top. And at that point, we can focus on, assuming that the price makes it there, right? So this is obviously an area with potential for rejection. If we do get a rejection, does the rejection take us back below the 21 week moving average? And if that does happen, does the 50 week still hold? Those are the things I'm looking for. If we can clear these levels, then we can focus on the 2021 top, which has been absolutely the toughest level for Bitcoin to sustainably break. We've been through it many times here since March, but I maintain, sure, we have higher highs that actually fall into technical resistance a bit more. You can see this red line up here. We had pretty much two tops within $50 from each other, I think, in that 71.9 range, and so that has to get taken out, eventually as well. But this 2021 top has been very telling to me because we've had very few candles that sustained above a full candle body above that level without a wick through, and those wicks were constantly signs of weakness to me. So again, I say until we have full candle bodies printing above here and then printing above here, we can't consider a legit attempt at a new all-time high. And so, yeah, what I want to see is eventually breaking these levels, breaking this mid-cycle top, breaking the 2021 top at 69K. And if we could do that, then obviously all that liquidity in the 70K range comes into focus. As you can see here, there's quite a bit there still. And there's a solid ladder up to, 75, 76K here. And I think that once we can establish, if Bitcoin can establish a spot above this 69K level, then this becomes much easier to eat through. And we have a good shot at going back to revisit those all-time highs and potentially set new all-time highs, possibly even before the election. But coming into this, I'll be honest with you, I expected to kind of stay in this range up to the election and then see real moves take clarity after the election. The speed that we're seeing things happen right now, I don't know that that's indicative of what's going to continue. It feels like a knee-jerk reaction to yesterday's cut, which was the catalyst. So Mike asking, did you expect this melt up after the drop in rate? I was thinking there'd be more of a God candle than we got. I'll be honest with you. I was expecting more of a sell the news event. And, we did get a little bit of a dip yesterday. And if we look at the candle chart and break it down to like 30-minute candles, we can see, let me clear trend precognition out so we have a little bit cleaner chart. So yesterday that came down 2 p.m. my time. Okay, so there was a pump, there was a dump, but it didn't go very far. And I'm not going to lie, I thought we were headed deeper, and I scaled out of some positions here, which in hindsight, I obviously would have liked to profit higher than I did, but I didn't take any loss, and that's what's important to me, right? Protecting that capital. I was essentially trying to create some dry powder to utilize on a dip. At the moment, I'm not getting that dip, but my MTF bots are active, and if we get it, I'll fill it that way. So in any case, I wasn't expecting this move, and I'm not sure that TradFi was expecting this move either, because they were red yesterday, and had a red close yesterday, but now, of course, as I mentioned, pre-market hours was forecasting a big day, and we're seeing what 400 points on the Dow so far and climbing, and S&P up 91 and a half points, 1.6% on the day so far. So the market's responding well at the moment. So again, I'm focused on those key levels to see where this goes, right? Is it breakout or is it fake out? Right now, I'm not going to lie, it looks pretty solid. I do know a lot of guys who are shorting this, and I would just say that be prepared to get squeezed. So if you're, however you're trading, whether you're long or whether you're short, my suggestion is always, and this is not advice, I will say this is how I trade, is to scale your way in and out of these positions and be prepared to be wrong. And so if you are opening a short here and you're prepared to scale that short all the way up, um, you know, and I don't know what your stops would be. I'd be very careful with the leverage, that's for sure. But be prepared to be squeezed. Be prepared to scale your way up higher, and then maybe you end up with a pretty good position. How deep you can go is different for everyone. So just keep that in mind as you approach this. So again, really to summarize things, the boundaries that we had identified previously remain intact. We are looking at a potential breakout here, at least from this local range. Whether it's enough to get us back up into the above the mid-cycle top, and ultimately the 2021 top, and really ultimately into printing higher highs. That's really what we need to see, right? So higher highs don't come in until we get to at least what was this one? This is above 70K, right? So and the real higher highs are beyond that. But we had a series of lower highs, and now we need to start a series of higher highs to start building back above this. So those are the levels I'm looking at. We have a weekly close coming up this week, obviously on Sunday, and seeing that happen at least above this 21-week moving average would be bullish. Seeing it happen above this 2021 mid-cycle top would be even more bullish. The higher we go, the higher we get a close. Obviously, the most bullish we could be. But then I think real clarity comes from the monthly close, and simultaneously we'll have a quarterly close here at that time. So are we going to get higher highs out of this? And the higher the time frame, the better in terms of outlook, right? So on the quarterly basis, where are we now? We're a big giant doji candle forming at this point. Obviously, a lot of time between now and the end of the month to see how this thing ultimately prints. But we do have a higher high at 71.9, but the previous month open around 72,300. That would be that's probably the most bullish you could get. That's the most bullish and the most clarity you could get, I would imagine. So anything between here and there obviously opens the door for a bit of speculation, but I think that if we can print above this mid-cycle top, that goes a long way towards getting us into position to grind up this way. So if we get that monthly close that's way up high, or that quarterly close rather, that's way up high, then that obviously speaks to a faster run, potential to run higher faster. But I've been prepared for a slow grind all along. All year I've been prepared for a slow grind, and I remain prepared for that. So we just have to see how things develop and take things as they come. But again, I've identified the markers that I'm looking at to give me confidence that we're going to move level by level higher, or potentially lower. Of course, this moving average down here, the 50-week moving average, obviously is still a threshold for me, as is this double bottom. And if things really, really break down, then the trend line is still the line in the sand for me when it's all said and done. Hope that helps you out and gives you some insight, at least to the things that I'm looking at, and gives you some things to consider for your own trades. Again, if you like the stream, do me a favor, smash all the buttons. And with that, I'm going to wrap it, my friends. Hope you guys have a fantastic day. And as always, trade safe, my friends.